Hey, Federal Reserve recently announced they're going to cut interest rates 0.5 point for the federal funds rate. Now, it's important, this moment's really important for people with mortgages, credit cards, anybody looking to buy a house. So what does the federal funds rate cut mean? So I'm going to break it down here. So for homeowners, this can be a really good opportunity to refinance. Mortgage interest rates tend to move in tandem with the interest rate cuts. Now, it's not a direct correlation. They actually are indirectly related. Federal funds rate is actually a short-term rate. So we actually might see federal funds rate move up or down and interest rates either stay the same or interest rates go down while federal funds rate doesn't change at all. But it's important to understand they are correlated indirectly. Generally speaking, as the federal funds rate, short-term rates come down, we'll see some relief in mortgage rates, which is excellent because it's been much needed. It's been 4 years since the rate has come down, and actually, so it's been long awaited. So if you locked in your mortgage at a higher rate, let's say you bought a year or two ago, might want to look at refinancing. Even a small reduction in rate can save you money over the life of the loan. So here's a kind of a rough example here. So let's say you have a $300,000 mortgage and you're paying 6%. If you're refinanced to 5.5%, just a 0.5 point difference could lower your monthly payments, and that number could be significant over the time. Now, if you look at 300,000, and I'm just going to do a quick calculation here, 300,000 loan amount, and you're at 6% 30-year fixed, that payment would be right around $1,800. If you went to 5.5%, that would lower it to right around $1,703. But you got to factor in closing costs too. So just because you're dropping 0.5%, that doesn't mean that might not be a good decision depending on the cost of the loan. So be sure you verify how much the costs are based on your savings to make sure it makes sense. Now, consolidating high interest debt. For homeowners, this could be a big deal if you have other debt. So if you have credit card debt, or other higher interest debt or other things out there, medical debt, this could be a great way to consolidate everything into one. Even if your mortgage rate is lower currently, but you have a lot of higher other debt out there, this could be a big deal to help you save money, especially now that the rates are coming back down from their highs just this last year. So what about home buyers? What difference does the federal funds rate lowering make for home buyers? So if you're thinking about buying a house, this rate cut could be really important to make your borrowing cost more affordable. A lower interest rate means you could potentially buy more house for the same money. This can open up opportunities that were maybe out of reach before. So, kind of the same idea here. $300,000 house, let's say rates were touching mid-sevens APR not too long ago. So if you had, just as an example here, a 7.5% loan at $300,000 at 7.5%, that payment would be close to $2,100 a month. Now, if it goes to, let's say, 6.5%, that goes from $2,100 roughly down to about $1,900, saving $200 a month. So that could be a fairly significant drop. And obviously, if rates continue to go down, that could save even more money. But this can be the difference of whether you qualify or not, or whether you can buy the house you want or not. So if you have been on the fence, this could be a perfect time to revisit the situation of buying and what those numbers are. And why act now though, right? Why is it important to act now based on the situation in the market currently? So right now we've seen a drop in rates, but we haven't seen a flood of buyers. Really, it's really a stable market. It's actually dipped in most areas into a buyer's market. So what that means is really buyers are having a little bit more advantage than the sellers. So you can get things like seller credits, maybe price reductions. Seller credits can work really well in tandem with lower rates and a buyer's market, because that can help you drive down your monthly payment or bring less to closing. Now, here's the thing though, you don't want to wait too long on this, because you might find that rates might be lower a year from now, but house prices could end up being higher. So if you wait too long and the interest rates go down lower, that can benefit. But if you have to pay a higher price for the house or compete with more buyers, like we're already seeing now, because rates have come down over the last month, we believe that it's going to be harder to get under contract for buyers as rates come down. So if it's something you're thinking about, let's set a strategy call. Let's figure out how we can help you. Go to mortgagestrategycall.com, or you can go directly to my website at kevinbrierton.com. I'm a certified mortgage planning specialist with Neo Home Loans. Super excited to help you out with the plan. If you have any questions or need any help with this, we'd be honored to help you walk you through these numbers and make sure you understand kind of what's encompassing the importance of lower rates and how they're important to your specific situation. Thanks again for watching. We'll catch you on the next one and have an awesome day. Thanks again.